In this video, I'll share with you why you must get into the habit of looking at larger time frames in your trading. Even if you're trading day trading or you're just quick swing trading, whatever it may be, you always need to look at larger time frames. So in this video, I'll share that. And I think this video will be under 5 minutes. So I think we'll be able to get one video under 5 minutes. So first up, let's talk about a trade, and then I'll share how looking at larger time frames helps you even more, right? So we entered a trade here on Knowles, and instead of doing our 2 entries, we did 1 entry. Let me scroll in a little bit here. 1 entry here, and we were a little concerned about the market conditions, so we exited pretty early. You'll see here, and then we exited our first position here, and then we left our other position here with a stop loss below this point here, right? So you'll see here, Knowles is currently pumping right now, and we got cashed out, which is roughly probably 18% or so. Yeah, about 18. Well, if I go up. Yeah, 18%. And we cashed out at 89%. We left 11% of the coins in. So we got our original capital out, 11% of the coins in to ride up or to just kind of hold long term, and we'll sell when it gets up to 30 or 40%, if it ever gets to that point. So that's this trade. And one of the things that's pretty obvious when you look at this, if you watch my other videos, that I suggest you trade off 1 hour candles, right? So this is 1 hour candles. It's pretty obvious where you should buy, right? You should buy here. You should buy right here, right? You should try to buy right here, right? That's kind of obvious. You can just look at that. But when you start going to the larger time frames, it becomes even more obvious. So we're on 4 hours right here. See how obvious it is that this is like a huge downtrend? Remember, this is 2 days of downtrend price action. So if you see 2 days of downtrend price action, look at how the buyers actually reacted there. Buyers reacted by an 80% upside, right? So here, we're a 25% downside 20% downside when we actually purchased, right? Actually, you count here, sorry. So we're at a 27% downside when we actually entered our position, and then there's probably still more upside to go, right? But that's why we have our free coins in there. We've got our capital out, right? We're looking at the 4 hour, right? Because what you're also looking for is, how does this asset trade, right? How do the buyers respond? And the only way you can really get a good feel of that is look in time frames that are larger than what you're looking to trade. We entered this trade expecting, and if you're in my group in Discord, which you can join down below, but if you're in my group, I was calling out trades like this and saying, look, we're going to be in this trade for 3 or 4 days. That's our time frame. And how long we were in this trade? 2 days. So we were in this trade probably two and a half days, probably. So that's when we analyzed it, when we looked at the setup and everything else. That's how we determined how long we were going to be in this trade. But we also looked at the larger time frame. So if you look at the 12 hours, so look at the 12 hours here. Same pattern kind of emerges, right? Of course, because it's just bigger time frames. But isn't it even more obvious where the value is, or where you should be entering your trades, right? Should you be entering right here? No. I mean, I guess you could if you think that there's an upside here. Where's the best place to enter here? I mean, the best place obviously is down here, but assuming we're not going to get to this price point. If we do, and I mentioned this to my group today, some charts are at this price point right now. And if people that bought at this point in time are still holding and it goes below this, they're going to be very concerned. On Knowles, we're not there yet. All right, there's still appetite. Now, there's still a downtrend. See this? And this might not be a 5-minute video. So see, there's still, you could say there's still a downtrend, right? Still a downtrend. Now, you could also argue that, no, you can't argue that. There's no uptrend. Maybe a small uptrend building. Maybe. Quite possibly. I mean, but it's going to be sideways or it's going to go down here. It's hard to say. Remember, we're looking at 12-hour time frames, okay? So this is 12 hours of price action. Let's look at the day. All right? Same thing. Obviously, the trend still stands up because we're looking at 12 hours. But you get the general feel of where things are at. If you're not doing this, and I think some people are that have been watching my videos, but if you're not, you need to start doing this. You need to understand where you're at in the larger time frame of that chart. You need to understand how the buyers react in the larger time frame of that chart. And then if you want to do a day trade, if you want to do a swing trade, you're at least understanding where you're at in that trend overall, right? The other thing is, let's go and do the 3 days. Once again, if you're looking to enter a swing trade, think of it this way. If you're looking to enter a swing trade and you're looking to be in that for 1 or 2 days, why wouldn't you want to look at the 3-day trend and to understand what's the overall trend of that market? The other thing that you want to keep in mind too, and this is why the daily is so important to look at, okay? So we're looking at days, right? You want to see what's the average price movement, right? You can just do this easily saying, well, there's 23% of price action. Well, it's more than that, but there's from the bottom price all the way up, there's 29% of price action on that downtrend, right? But look at these days here. These days, when there's tremendous amount of, there was still upside, but a tremendous amount of sell pressure, right? There's only 10% of price action, right? That's the other thing you want to look at. You can only get this information. Well, you can get it by looking at the hourly chart, but you can only get this information visually, I should say visually, by looking at the daily chart. So if you're looking to make 10% and the last couple days price action has only been, let's say 8, are you going to be able to make 10%? You know, these are the things you have to consider. Oftentimes you get so stuck in even the hour time frame, right? You get stuck on this time frame here. We did not make 5 minutes. It's 6 minutes. So you get so stuck on this time frame here, right, that you don't think about what's the price movement in a day. If I'm looking to make, let's say we were looking to make 18% in this trade, right, on this second position, right? That's what we were looking to make. That's where we put our sell at, right? Analyzed the chart, analyzed everything. That's what we said. Okay, this has a high probability of us being cashed out in the time frame. We actually said 3 to 4 days, 3 to 4 day time frame, and that's where we put our exit, right? But you can only get that. You can only say, look, I can make 18%, or you can't only say. You can only reason that if price only moves 15% in a day and it's rejected constantly at that level, right? Can you make 18% in the day? What's the probability of that happening, right? That's what you need to start thinking about. That's one of the things to kind of think about. That's why I stress that you always should be looking at the larger time frames. Another reason, and I should have included this, is that smart money, the money that moves markets, the money that actually creates the support in the base, the money that smart money invests down here, acquires down here, moves the market, and then quote unquote, I hate the word smart. I mean, I hate the word dumb money, but, and then dumb money enters here. Dumb money starts entering here, right? And here. That's where they start entering. Guess who's selling there? Obviously the smart money. Smart money acquires here, but smart money is looking at these larger time frames. That's why you want to look at these larger time frames. Smart money is looking and saying, okay, you know, this is undervalued at this point, at this price. Actually, they're probably doing something like this. This is undervalued down here. And see that movement here, right? This is undervalued. They acquire here. They're not selling right here like we are. I mean, we're looking to quickly scalp. I mean, the reason why we sell here is that we bank what we call free coins, right? So that we'll sell up here when it gets overbought, right? So here, but smart money is looking to sell up here, you know, or, you know, sell probably right here. They're looking to make 82%. They're looking to make, you know, 89%. They're acquiring this, but they're looking at the daily, and they're actually looking at the weekly. I mean, on some charts. This chart obviously here, and this Coinigy, I can't go back that far if it was even on this exchange, but they're looking at the weekly. I mean, think about this. If you look at the weekly and you're able to buy here, right? These are weekly time frames, and you have a weekly perspective, and it trends the same trend down as it trends up, right? So let's say it trends up, the same kind of trend angle, not exact, obviously. Let's say it's slower trend angle, right? Hopefully this is clear. Slower trend angle. Keep in mind we're on the weekly, and you're able to buy right where we bought, right? You have the longer term time frame. You're looking at 21 days if the trend stays the same, right? I'm doing this just off the cuff, right? So there's obviously you can do more analysis, but this is the way smart money, the ones with capital that have many different places to put their capital, but they can also park capital for a little bit longer than typical. This is how they look to trade. This is their swing trade, right? Especially in this market. So we did not make 5 minutes. We're actually at 10 minutes, 46 seconds. So hopefully this video is valuable on why you should actually look at larger time frames. And we do this no matter what trade we enter. If we're looking to enter a trade, so XMR is pumping right now. So let's look at XMR on the we're looking on the 3-month. What are we on? 12 hours. Let's look at the day. Look at where we're at on the XMR time frame, right? All right. Now, just imagine that you have capital, okay? A large amount of capital, okay? Large amount of BTC in this case. So not, BTC. And you want to park it in something that's going to have a high probability of giving you better return than what you could do with just keeping it in BTC, okay? Looking at this daily chart, are you getting the most value if you buy here? You could say, yes, if you know something or believe something about this asset, XMR, that it's tremendously undervalued, right? You could say that. But is there more opportunity for you to find better undervalued assets than buying something that's at the top of the value where most of the trades have happened, right? Look at this. This is the best way to look at this. One of these days, I'm going to make a video. Where did the majority of trading, this is where the majority of trading has happened, right? Not so much down here, but between this range, the majority of trading has happened, right? There's been no trading at this level. So how do you know if there's value at this level? How do you, as someone that's looking to protect your large capital, looking to put your capital in a place and park it somewhere in order to make good returns, how do you know that the buyers and sellers have agreed that there's a value up here? Do you know? I mean, what tells you? I mean, is there some research you have? Obviously, if there's some research that tells you that there's value going to be created up here. But right now, according to the daily, or just the price action of this asset, there's been no proof that there's value up here. Okay? So this is another way to look at this. Why I always stress that you should look at the larger time frames. Smart money's looking at the larger time frames. And think like smart money. If you had, I know it's sometimes hard for some people, but if you had 50 million or 10 million, let's just say 10 million to park, are you going to park it in something where you don't know if there's value, right? If it's unsure, if the buyers and sellers haven't really agreed that there's value at this level, right? So hopefully that helps. We did not get to 5 minutes on this video. Once again, if you're not part of the Discord group, you'll see a link down below for the Discord group. You'll find a link to some of the tools that I use as well. I use some tools for stop losses and charting. So if you're not sure what tools, they'll be linked down below. And I look forward to seeing you in the next video.